Alright, good day learners. In this video clip today I'm going to help you with the calculations for question 63. Remember in previous videos I went through the calculations with you, concentrating on whether they were exclusive or inclusive, and then secondly working out what the amount is that you owe SARS or whether SARS owes you. Question 63 asks you to calculate the missing figures A to N and then to do that calculation. But the problem with this exercise is it could be a little bit confusing because you might not recognize which are exclusive and which are inclusive. So let's start by looking at the creditor's journal. Now remember, the creditor's journal is when you buy on account and you owe your creditors the amount for the goods or the items that you bought plus the VAT. So if you look at these figures here, your creditors control is actually the inclusive amount. You owe them the full amount. You owe them for the trading stock, the equipment, and the stationery, which these would then all be recorded at the exclusive amount. On these three figures here, the trading stock, equipment, and stationery, you would then work out your 15% VAT, and that would give you your VAT figure. So there's various ways you can calculate this now. You can use your creditors control figure, this being 115%, or you could use these three added together, which would be equal to 100%, and find the VAT. Or in this case, there's a simpler task, that this creditors control is just the total of these three plus VAT. So if you just subtract the two away from each other, you can find the VAT figure, 26,310. But that's not the case in all of them, so we're going to have to use those calculations. So let's look at the creditors allowances journal. This is when goods get returned. So some of the goods we bought here, we are returning. Again, the creditors control will be the inclusive amount, because you would be getting a reduction of the amount of the items that you bought plus the VAT, because you're not going to be paying for those. Now, you've been given trading stock, you're given equipment, you're given stationery and VAT. Now, in this one, there are two missing items, so it's not a case of just subtracting. Alright, again, following the same principle as before, these ones over here would be the exclusive amount. So your trading stock of 7,700, your stationery of 600, 8,300 would be the exclusive amount. So 8,300 divided by 100, because it's the exclusive amount. Remember my previous video clip. And you can find the 15% to get your VAT figure, which would be 1245. And then you can just add up and you can get your creditors control figure of 9545. Or you could have used this calculation times by 115 and got C first and then found V. Right, so let's move on to the debtors. The debtors are the people that owe us money, and they owe us for the sales plus the VAT. So your debtors control again would be your inclusive figure. The sales figure would be the exclusive figure. Now the problem here is that we don't have either the inclusive or exclusive, and nor do we have VAT. The only figure you do have is your cost of sales. And they did tell you at the beginning that there's a markup of 80%. Now that's an old calculation to you. So your cost of sales times 180%, and you could get your sales figure of 198,000. That's now the exclusive figure, so find 15% of it, which will be your VAT figure of 29,700, and add those two together, 227,700. The debtors allowances is just the reverse of that, because those debtors are returning goods. So the debtors account will be credited with the inclusive amount. The debtor's not going to pay you for the goods, and nor is he going to pay you for the VAT. So the debtors allowances figure plus the VAT, these two together equal that. This is the only figure you have now. So you're going to have to start with 16,560 divided by 115, because it's the inclusive figure, times 100, and that will give you your debtors allowances figure of 14,400. Or you could times by 15 and find the VAT figure of 2160, or obviously the difference between the debtors control, the total, and the debtors allowances would also have given you the VAT figure. So there's often more than one way to calculate these figures. You must just look for the figures that are the easiest for you. And then, having got your sales, you can divide it by 180 and find your cost of sales of 8,000. Now, the petty cash journal is when you pay with actual cash. And when you pay for the items you're buying or the expenses plus the VAT. So again, the petty cash amount is your inclusive amount. So you owe for the delivery expenses, which is exclusive. You owe for stationery, which is exclusive. And you've been given the VAT. So these three figures here give you the total amount you paid. And so just by subtracting, you can find your stationery figure of 800 Rand. Now the bank works exactly the same as the petty cash. The bank in the cash receipts is the total money you receive. And you will receive money for your sales, you'll receive for your fee income, you'll receive for VAT. You do not receive for cost of sales. Remember, that is not money received. But you'll also receive from your debtors. And so K is literally just the missing figure again. Sales plus fee income plus VAT plus your debtors control figure. And you can therefore calculate your bank figure of 129,665. The cost of sales, the normal calculation. You've got your sales, divide by 180 and get your cost of sales figure of 22,000. So bank, same as petty cash, your bank is the inclusive figure. And that is exactly the same in the cash payments. N, the amount you had N, is the inclusive. It's all the money you pay out. So you will pay out for trading stock, salaries, consumable stores, you'll pay for VAT, and you'll pay your creditors, plus you'll pay what's in the sundry. Now, this one a little bit more complicated because you don't have the VAT figure, so you can't just add up like we did in the previous exercise. So the first thing we're going to have to do is work out VAT. Now, you've got to decide which of these items have got VAT on. Trading stock is subject to VAT. Salaries is VAT exempted, so there's no VAT. Consumable stores has VAT. Your creditors control, there's no VAT on. You would have charged your creditor VAT back in the creditors journal when you sold the goods to them, so you don't double test. In the sundry, and they gave you the details, there is VAT on telephone, there is VAT on municipal charges or rates, but there's no VAT on a loan repayment. And so, taking the items that have got VAT on, you can then work out your VAT, because these would all be the exclusive amount, and you can get your VAT 7650. And then N, the missing bank figure, is the total of everything, even those that didn't have VAT on. Everything, all these columns over here, if you add them all up, 60,650. So right, it does look a little bit complicated, but as long as you remember the principle that your bank, your petty cash, your debtors control, and your creditors control are all the total. They're the inclusive amounts. So when you're working with those, whatever the amount is that you're given, you'll divide by 115. Whereas everything else, the trading stock, the sales figure, the stationery, the debtors allowances are all exclusive. So whatever those figures are, you'll take it divided by 100. Now, as I said to you before, VAT is a small section, but it's a very important section because it's normally always there in the exams, and it will be going into grade 12 for next year. So get these amounts sorted out. Get to calculate the amounts, because then it becomes relatively easy marks for you. Good luck.